excited to be here. First of all, welcome to everyone who's here. My name is Regina Reyes-Heroles. I'm a journalist, and I write about finance and the economy and fintechs and personal finance. So this is like my dream conversation here today. I am super happy. Let me introduce you to the rock stars of the panel today. Maria Ariza, CEO of Biva. Susan Greenwell, SVP and Head of Global Government Relations, MetLife. Shu Nyata, co-founder and managing partner of Bicycle Capital, and Felipe Vallejo, president de la Asociación Fintech Mexico. Thank you for being here. And you can find their profiles on the web and in the application that we have for the event. So I encourage you to look them up and see what they've done so that we have more time of hearing them. And so we were having a conversation right before coming here, and Shu said that I needed to send all the hot questions to him, or the spicy questions to him. So now I'm going to start with you instead of whatever the script said that I needed to do.
Okay.
And look, we've been talking about this all day. We just heard the three ambassadors talk about what is going on in Mexico, and we have a first woman president. The U.S. has an election in less than a month. We are seeing an electoral year in the world. We're seeing investments in it. I was just speaking to someone in equity, and they were saying, no, we're holding on. No, they're waiting to see what is going on. So there's a lot of uncertainty and volatility, and we're all waiting to see what happens. Now, you all represent a little threat of the financial sector, and I know that you've dealt with this uncertainty, and I would like to understand how this affects your particular business. And Shu, to begin with, what are you seeing in investments in startups in the region? You were just saying that most of your portfolio is in companies in Brazil. So why not so many in Mexico?
Yeah, well, I'll answer the general question. So I've been investing in tech for over 10 years, all for the last 4 years only in LATAM, because I fell in love with the founders and the opportunity here. I think it's ignored for the wrong reason, which means you can make money. But the fundamental rule of investing is be greedy when people are fearful, and fearful when people are greedy. That is actually the fundamental rule, but for some reason markets behave in the exact opposite way. And even though we know this is the rule, people in all these roles in investment firms are very nervous about sticking their heads out, because if you're wrong, you get fired. And if you just do what everyone else is doing, at least you're just doing what everyone else is doing and being cautious. So I just think it's bad investment cultures, bad investment philosophies. Warren Buffett runs towards danger. And part of the reason we are so focused on LATAM is because the rest of the world disappeared. The venture capital market in LATAM was $3 billion a year in 2018, and then 4.5 in 19 and 20 each, and then 17 in 21, and then 7 in 22, and then 4 in 23, and now we're back to below 4. This is exactly the time to be greedy. And so we're trying to do that. With respect to Brazil versus Mexico, we just follow where some of the most mature companies are. The Brazilian ecosystem is a little more, we're growth, and we're not venture investors, we're growth stage investors, so Series B and beyond. And we just try to go where the more mature companies are. We have in our pipeline companies in Mexico. Part of the issue with the Mexican companies is a lot of them are doing the same thing or addressing the same pain points around fintech, and so it's very hard to choose. In B2C fintech in Mexico right now, it's a bloodbath. You see the ads all over, right? Whether it's Plata or Nubank or Walla or Story or Klar or Mercado Pago, or, it goes on and on, or Spin or Hey Banco. Like, all of these are doing the same effective thing. So it's just very hard to choose. In Brazil, there's a lot more variety. So be greedy when people are fearful.
Okay, well, we're going to keep that in mind for the conversation. Let's be greedy. Now I'm going to go with Susan, because you work in a place where you need to think about all the risks that exist in the world, and the rest of us don't want to see those risks in general. So how does uncertainty fit and take action in the insurance sector, in particular in MetLife, and what you're doing?
So the life insurance sector loves certainty. We see that as kind of the foundation for long-term stability and economic growth. And MetLife has been in the business for 156 years. So one thing we remind ourselves of when we're in times like we are today is that we've seen uncertainty before, and way worse than we're in right now. And so what do we do about it? You know, when we sell a life insurance policy, we're taking on a 20, 30, even 50-year liability. And so we need to look for longer term stable assets to offset that liability. And the way that we do that, when we don't have the certainty that we'd like to have, because we're in the business of managing risk, we scenario plan. We identify what are the risks that we can control, and we make plans to try and mitigate the ones that are out of our control. And, you know, we don't always get it right, but, you know, we're doing something right to still be here 156 years on. And, you know, currently we're operating in 40 countries around the world. And so, you know, one of the benefits of having a diverse portfolio is that, you know, you might see a lot of volatility in some markets and less volatility in others. And that, you know, that's a risk mitigant in and of itself, the diversification benefit.
Thank you. Maria, tell us a bit about the market and what you've seen at Biva, because it's been a tough few years.
Yeah. Well, hi, Maria. My name is Maria Arisa. I am heading the Biva Stock Exchange. And I do agree with Shu that be greedy when there's opportunity. However, I do think markets are important. Investments are important. And when you enable both interests and put them together, investments and markets, then you find the real opportunity. If, I don't know, Mexico right now is at this moment in time where there's uncertainty, where there's lack of rule of law, or even some issues or discussions are in the table that are getting investments nervous. That that result in a very volatile environment for investments. And that has been the case in Mexico, and that has been the result of the markets in Mexico. Mexico's market has underperformed 25%, or again, vis-a-vis the other global results. So it's really an important issue to think about it. Of course, there's global volatility. Of course, there's geopolitical problems, and we know about them. There's inflation, and all of the markets are impacted by that. But still, Mexico was a very local, idiosyncratic problem as well. So in order to be able to really get a better returns on markets, better investment attractiveness for foreign investments, we need to really start looking at what we say. I mean, internal industrial policy, which has been the late narrative because of elections, now has to be focused on attracting foreign investment as well. We need foreign investment to be able to grow in Mexico. We need foreign investments to accompany national investments, and that, along with efficient capital markets, really be able to deploy capital along our country.
Matt, can I say something spicy?
Do.
So yes, we need local investments, but I've been, as I mentioned, investing in the region for about 6 years, and the people who are most averse to investing in LATAM are people in LATAM. And you talk to family offices across the region, and you ask them what percentage of your portfolio in LATAM, there's like as little as possible. And they say, no, but we need other capital to come into the region. And when I go to talk to folks in Abu Dhabi, who one of our anchor investors is in Abu Dhabi, they say, how much local capital do you have? it's very circular.
Exactly.
And people won't believe in the region unless the local families don't find the first opportunity to send their money to Miami condos.
Right, and you know, when you listen to institutional investors in Mexico think about national investments or either family offices, they say, hey, we need to diversify our portfolio, look for other risks abroad, right? We are already at a full Mexico risk. And anyway, we need those investments, those national investments, so that we can really attract foreign investment. But anyway, the narrative and the policy around it, it's really important. And that has been a real concern in the last year. And look at the results. I mean, the results are there. Our markets are underperforming.
Felipe, now let's go with you and the fintech world that had, I mean, we saw the first unicorns a few years ago. We're all exciting. We saw investment in startups that were really big. And then it was COVID. It was a lot of other things that happened, but uncertainty kept going. And how does this impact fintech, in particular in Mexico? And maybe also comment a little bit of what Shu was just saying about how maybe the family offices in LATAM are not investing in LATAM companies, but are, let's just keep the Miami condos aside, but maybe choosing other types of investments.
Amazing. Well, first of all, I'm Felipe Vallejo, president of Fintech Asociación and also CEO for Bitso Mexico. And let me start with the second question, which is I absolutely agree, and I can see my cap table as Bitso, and most of my investors are non-Mexican. Imagine investing in a fintech in Mexico in 2014, and then we had several rounds until 2021. But basically, imagine someone telling you to invest in a crypto LATAM company in 2017, 2014, 2020. Family offices in Mexico were, it was absolutely a no. And then like VC funds also were, like Mexican VC funds weren't very bullish on Bitso. And let me tell you something, you don't need to put all your chips in one investment or in one in one industry or in high risk, whatever. Pero the big changes happen when you take risk, no? Entonces, let me tell you something about Bitso. We dreamed about having 1% of the remittances from the US to Mexico. 1%. That was our dream. Basically, 1% flowing through Bitso, no? This year, we're gonna facilitate the flow of 10% of all remittances from the U.S. to Mexico, $6 billion in a very specific crypto use case in Mexico, no? And now, the usual thing you hear about crypto is the price, no? And who got rich and who got poor and who lost money, who won money, whatever. But when no one's speaking about crypto, about the prices, that's when actually Bitso at least is building things that actually are an application of crypto. No, the investment thesis is fine. You have a new ETF in the US, and you have it's the second largest ETF in the US after gold, and it took the Bitcoin ETF in the US about 6 months to do or to grow in AUMs of what gold did in 4 years. So it's crazy, no? And then just speaking about risk, no? The largest card issuer in Mexico last year was a fintech. The largest buyer of homes in Mexico was a proptech from Colombia. The largest employment provider, well, it's not self-employment provider because they're gonna kill me if I deem them their workers, no? But if I deem, yeah. But are these delivery platforms, no? 500,000 people do at least one delivery a year, no? In these platforms, that would make them the largest employment provider in Mexico, self-employment provider in Mexico, no? You have all these examples of these tech companies that are doing things and building things silently, and then you come to these Shu was telling me, like, very formal, no, like this forum, but you don't have that like those companies coming to these high level tables. Like, you go to the business tables with the government, etc., and absolutely no one is there, and you have these crazy companies doing amazing things and big things now that are not represented there. But going back to risk, I think there's a lot to do on. I think the only way to bring capital to invest in riskier things and in VC funds, etc., is to have good exits. No, when there's an example of there's a family in Monterrey that heavily invested. I'm from Monterrey. I live here in Mexico City, but this family invested very early in Nubank, and they made a killing. And now everyone in Monterrey from their circle are like, como, damn, I should have invested in something como like that, no? Como I think we haven't had como enough como examples and exits to actually for people to actually say, yeah, I'm going to do it, no? Pretty much the narrative today is everything is failing, no?
Which is crazy because I know that more good stories and great business stories are happening out there. So I think we need to hear more of those, and I agree. Let's talk later because I want to tell those stories as well. Let's go to the title of the presentation because it was Stronger, really nice song that we had at the beginning, tech markets and financial inclusion. So we're going to try to address technology and markets and financial inclusion. And I'm going to go back to Shu now and start with technology. Because since you're investing all the time in different startups that bring new things to the table, I am sure that you get to see incredible ideas. But and this is, we want you to give us your secret recipe. How do you pick those companies? What do you pay attention to? What are the things that make you sort of, when you're seeing all these different companies and decks in front of you, what makes you say, hey, I want to look deeper into this?
Yeah, so we're a slightly different fund. I like to say we're not venture capital because that changes the conversation you have with LPs and with companies. We're growth equity. What does that mean? Is once you get through the Series C and A, and now you're at the Series B, that's the language of venture, then you qualify for growth equity. Our portfolio is probably going to be a dozen companies, right? For a $500 million fund. So it's a very concentrated portfolio. Venture capital firms have multiples of that number of companies because they expect some to be 10 and 50 X's and some to be 0. We expect none to be 0 and all of them to be 3X's. It's a very different formula. So we don't look for brilliant ideas. We look for sustainable companies, and we look for hints that those companies might be sustainable. And one of the most important things we look for is capital efficiency, because when you have to know where the cycle is. It doesn't matter how brilliant your company is. If you're in a cycle where capital is scarce, you have to be able to spend capital very carefully. And a lot of companies got spoiled in the last cycle thinking they could do everything. Raise $300 million and build the whole value chain in my industry, no problem, and then I'll raise another 300. That's gone. And that's gone globally, by the way. This is not a LATAM thing. And so one of the first things we focus on is how efficiently are you using capital? And we like companies that do not consume very much capital at all to grow. So that's a very important thing for us. But the other very important thing is resilience, which means it's very difficult to kill you. Even if you use very little capital, it's very hard to kill you. And some companies are very easy to kill. Some law could change. If you're a Sofipo, let's say, for example, to use a Mexican example, and there are lots of Sofipos now. Sofipo level 1, 2, 3, and 4, all kinds of fintechs sitting in that bucket. And there's some companies that are banks. And if you're Sofipo, you're not a bank, but you're offering all these banking services. One day, the banking lobby will be successful enough to say Sofipos are illegal, they cannot lend, and then you're dead. So we can't invest in a Sofipo company, as great as they may look, as capital efficient as they may look. So we care in this moment in the cycle a lot about those two things. But because we're growth equity, the idea part has already passed. So we're less focused on, is this a brilliant idea?
Does technology play a role into the growth? Because
so
the unit has to deal with it.
The most wonderful thing about technology, what is the way we define technology, and the reason our firm is called Bicycle Capital is because bicycle is our definition of technology. A bicycle is a very cheap thing that humans invented that dramatically improves your life and doesn't cost a lot. That's what technology is fundamentally. And what technology does is it just lowers the cost of everything. That's one way to define technology. What is technology? Something that dramatically lowers the cost of doing anything.
Right.
And when you do that, you open up markets to serve. So financial institutions now can serve much more of the pyramid because it doesn't cost as much to serve that layer of the pyramid as it did when you had a room full of people and mainframe computers and all the stuff that Santander has. Nubank has none of it. And so lower cost means more addressable market. And that's really the role of technology. We're not looking for cutting edge innovation. We're just looking for deployment of technology across very basic things that allow you to expand your market. And LATAM is the world leader in fintech innovation. A quarter of the world's fintechs are in LATAM. Brazil and Mexico are at the forefront of fintech innovation. Bitso is at the forefront of fintech innovation. The rest of the world will learn very quickly to look to LATAM to learn what's happening here, because it's way more advanced than almost any other place I've been, including China, by the way. And Brazil is right at the tip of that spear. So there's a lot to be proud of. And I think people get caught in the pessimism. In 2019, I was here and everyone was upset about AMLO and they thought Mexico's going to shit. It didn't. It's fine. And there are great tailwinds right now. And so there's this sense of real, like, pessimism is very easy to come by if you live in the context. This is true everywhere, not just Mexico. So sometimes you need an outsider to say, guys, things are great. You're the world leader in fintech, and technology expands markets dramatically, and you can build great companies here.
This sort of leads me to the next question, because we want a fintech sector, and I know, Felipe, you've been sort of leading that strength. We want a fintech sector that's stronger. We want it to participate more. We want financial inclusion. We want, we want to make it bigger and better, stronger, as the title of the conversation today. What should fintech be focusing on to prepare, thinking in the context of the North American region, because we're also here to talk about the region as a probably force of strength. So what should we be paying attention to so that there is a connectivity in fintech throughout the region that can make it stronger?
Yeah. So the first thing I want to say is, in Mexico, for fintech, there's a huge opportunity. And like, I went to a banking convention and President Obrador showed a slide, no, with all the net incomes of banks, no, and the largest bank had something like $9 billion in net income, which represented 50% of their global, and this is a big bank, no, of their global net income, no. And when you see $18 billion of net income, and it's just like basic economy, when you have, like, banks, I studied economics, and banks weren't even in the economic models. Like, banks should be almost close to zero in net income. They should be just like a conduct to assign capital, no? But when you see $18 billion in net not revenue, net income, there's an opportunity there. Like, what's happening that the banks are can actually generate 18 billions, no? And the answer is somewhere around lending, somewhere around international transfers, not remittances, international transfers, which is, remittances are like $60 billion, but like international transfers between the US and Mexico are over $1 trillion. And like there's an opportunity there, no? Those are two big topics, no? And then in financial inclusion, it's not just about opening accounts. I think this is like a very common theme. It's about dignified finance, no? Like, how can you, when they ask me, we have banks applying to the Fintech Association, and the question is, should we let them in, no? These are banks. And my criteria is two. Like, what's fintech? Fintech is two things, in my opinion. Is obviously the use of technology to lower costs, no? And I love the bicycle. I didn't know bicycle. The name was about technology, no? Pero it's amazing. But one is the use, the high leverage on technology to give services, no? And that lowers the cost and makes it more accessible to more people. That's one, but that's not the only thing. Then you have customer centricity, no? You look at Nubank, for example, and I should be hired by Nubank because I'm just like speaking about them all the time. But they didn't, their innovation wasn't like super cutting edge in terms of the technology, but it was super cutting edge in terms of user centricity. No? That's the second thing, user centricity. And banks can use technology, and banks can be user-centric. No, one of the largest bank in Mexico went up in the fintech event last year and said, "We're the largest fintech in Mexico," And I was like, yeah, maybe, why not? No. But the part of user centricity is very relevant to financial inclusion. It's not about opening accounts. It's about actually caring about the client, no, and teaching them through embedded education in the product how to use things, no. And the only way to teach people about finance is by using the product, no.
And this leads me to my next question. You guys are being so easy on me. Susan, financial inclusion, which is something that is at the heart of MetLife, and you've been doing it for quite a while, and you've been focusing in Mexico in particular, well, not in particular in general, but doing very interesting alliances to try to sort of not get more people included only, but get more people into understanding the products, knowing how to use them, and trying to sort of even grow thanks to using those products. What has worked in these alliances, and where has this led you?
So you're right. We've had a very long-term commitment to financial inclusion. And, you know, I'm sitting here on this panel representing a 156-year-old company. And I talked about risk management, but really the reason we're still here is because we consistently innovate to serve the needs of customers whose needs aren't being met. And so in Mexico in particular, you know, 10% of all Mexicans are protected by a MetLife product. So, and the vast majority of our customers are low and middle income Mexicans. And so one of our most popular core products is an inclusive insurance product. And we have had this product for a long time. It's not a new thing, but we innovate and add different benefits that will serve people who are not served by traditional insurance, especially vulnerable and low-income populations. And so one example of an alliance we recently launched with the National Financial Services Consumer Protection Agency, CONDUCEF, and the National Institute of Women, a web platform which is tools, information, and services that it's called Te Quiero Seguro. It's specifically directed to serve women, and in particular, women who, it promotes financial inclusion and financial security for women. And it includes our flexible, inclusive insurance product. And we've designed that product with a specific gender perspective for that platform. So that's one example in the core of our business. Then you also know we've done quite a lot through our foundations, the MetLife Foundation globally and the MetLife Fundación MetLife in Mexico. Just in Mexico alone, since 2013, we've allocated $30 million between those two foundations to promoting financial health in Mexico. And I'm using the term financial health because one of the learnings is, you know, when you speak about financial inclusion, people first want to talk about education. What we need is education. What we've learned is that education is certainly not enough because education doesn't incent behavior change. And so we've invested a lot in behavioral science to find ways with partners like Ideas 42 or the Common Sense Lab to help people make good financial choices for themselves, not just have an education about finance, but to incent them through behavioral science to act in their own best interest. Other types of programs that we support include the BFA Global's FinSalud project, and they've developed two tools that both measure and improve financial health. One of the tools is called DORA, the other is CIMA. So we're investing in research, we're investing in tools, we're supporting organizations that are creating incentives for people to build financial resilience. And the third example I'll mention is a partnership within the private sector that's coordinated by the United Nations Development Program. Biva is one of 9 companies, along with MetLife, that's part of this project. And we're very soon going to launch our pilot, which is focused on 300 micro and small businesses led by women with difficult access to the financial system due to gender challenges. And so this is a private sector partnership that's done in coordination with a UN agency. We're building products to address populations that aren't currently well served by the financial system.
That sort of connects with what Felipe was saying about embedding the knowledge and the user centricity inside the product so that we use it and learn how to use it and not make mistakes or make better decisions. Because if I ask here who got any financial education at home, I'm not sure who did. Anyone? You got financial education at home?
I'm from Monterrey, and I'm from
Regina,
Arab
right.
origin, so my mom made sure that I understood money and the importance of finance. Yeah,
Anyone else?
nothing complex, just to be.
Okay, I mean, because even, and this is going to sort of tell my age, but like nobody ever told me how to write a check, you know? So the first time I had to write a check, I had to throw it away. So I ended up, breaking a little piece of paper, and then I was nervous because my signature was there, and what if someone did something? I had no idea how to write a check. So all this needs to be maybe there should be something in between generational resilience that I did not learn, or maybe I should have been born in Monterrey. Maria, yes, Biva has celebrated its 6th anniversary. You guys sort of broke this like one-man show that
Nobody thought we would live for 6 years.
nobody thought you were going to live for 6 years.
Now we're here.
And you have 22% of the market, which
Yeah.
is really interesting. And I
Yeah.
know there's a long history ahead, and there's a lot of things that will lead you to have a more competitive and especially active market, which is what we need.
Yeah.
How has technology helped? And I want to talk a little bit about how that also helps financial inclusion, and in particular women, because I do know that for Biva and for you in particular, the inclusion of women in the financial sector has been something that's pushed you in general.
Yeah, thank you, Regina. Well, I'm just going to echo that technology does drive costs down, but also competition drives costs down. So the combination of competition with technology is what we thought from the beginning was going to be our competitive advantage. To really enable technology to be able to be more inclusive, a more inclusive market that would not only welcome new companies, even smaller companies, as we were saying before, that will be needing financing, competitive financing, but also new participants, new individuals that would be able to be attracted and participating in markets, and make an investment, a real formal investment, and have real returns. So that's what's happened. Basically, we use technology. We're using the NASDAQ engine, which is the most advanced low latency machine engine in the world, used by more than 80 exchanges in the world. That helps us not only, of course, bring costs down for the investors, but also be able to connect them directly to Biva's exchange, to absorb market data, and to be able to participate and operate within Mexican markets right away. We're using this technology also with a new program that we're launching, which is called Liquidity Provider, that is based on our technology, on our microseconds time frame for operations, which are part of their model, financial model. So this institutional investors that operate in other economies already, like Brazil, and that's why Brazil has an important liquidity exchange, This liquidity provider program will allow as well Mexican operations to increase. We have already increased the volume, the volume operated daily, 35% since our beginning, and I think we can further that in a very important way. So we are adding liquidity, which is one of the most important problems in Mexican market. We are allowing companies to participate in a more inclusive market in Mexico, and we are changing the face of any of us that we want to really participate in the market, being able to do it. Now you can actually, you don't have to have 10 million or more pesos to get into the market. Now with technology, we can actually get into the market right away. And look at this. Before Biva entered the market, we had only 250,000 brokerage accounts. In only 6 years, we are now reaching 10 million. 10 million people that have access directly to the market, which 35% of them are women. So education with technology, it's the combination that we think will bring along women into the investment world. So this is a way, of course, and gender bonds. This is the way we want to be able to deploy opportunities for women, access financing to women companies or projects, allow them to participate in investment opportunities, and giving access, low-cost access for all Mexicans is now a possibility.
I just want to say something in support of the Viva project. One of the big things that's happening globally in capital markets is the US system is breaking. And this is not just about capital markets, frankly, it's political as well. We're becoming much more multipolar. It's not just about the US anymore, but especially in capital markets. The NASDAQ and New York Stock Exchange are so flooded with subscale listings that nobody cares about all of these companies that are basically zombie tickers. It's just another ticker on the New York Stock Exchange. And there's a huge opportunity for places like Mexico. Saudi Arabia is doing this, Abu Dhabi is doing this, Hong Kong is doing this, Amsterdam is doing this, Brazil is doing this, to create other venues where you can have liquidity, which partly solves the problem of how do you exit. But you need to build that local exchange, you need to build that local interest, and we have to move away from the malinchismo of
Totally.
New York Stock Exchange, because it's really not one size fits all.
We need local markets to really be able to address local sizes and you know
And local flavors.
local flavors.
Hedge
Yeah.
funds in New York don't know anything about a weird Mexican company,
Right.
but people here may know everything about it.
Right.
To answer the last question, which is, I think, maybe is going to be tough. Let's talk about the future, because we want to be optimistic and we want to think that you know, we can take these opportunities and make them happen. And we want to have markets that are inclusive, markets that understand the needs of the companies, that can bring investors to make these companies grow, and an ecosystem that shines in general. In the context of this trilateral cooperation that we're talking about today. So how can your company or your business in particular focus and generate actionable ideas? One thing, I'm going to say, just say one thing that you can partner with someone. What is the thing that you're okay putting on the table to say, this is what I'm going to do, so that next year when we meet here, I can hold you accountable for that and see how you've made things better. And we can start with Felipe, since you were smiling.
Yeah, no, that's I love that question. Let me tell you one for next year and one under 5 years.
Okay.
So one for next year would be Bitso will process 20% of all remittances from the US to Mexico. Let's see if we can double, no? And about the future, like 5 years, 10 years, no, under 10 years, definitely. I would say several things. One, G8 country will have Bitcoin in its treasury. We already have countries that have, but it's El Salvador, Bhutan, like smaller countries. But the US will have, or a G8 country will have Bitcoin in their treasuries. About 20% of all international trade payments would be done in stablecoins, in crypto. And the third one is one blockchain company is going to be in the top 10 regarding, like, in terms of market cap in the most valuable companies.
I'll see you in 1 year, 5, and then so on.
They used to brag about, she was our best advertisement. She would say, oh, there are 10 times more crypto accounts in Mexico than brokerage accounts. And now it's double the, so there are the 2x more brokerage accounts than crypto accounts. Now Maria it's
She
getting
has the lead.
but it's still 10 million and 5 million. So I'm gonna be your promoter.
Because of that, then Maria, why don't you tell us what Biva is going to do?
Yeah, I think the role of capital markets it's essential to finance the growth of any economy. Right now, Mexico is in a very important position of a nearshoring opportunity, which needs infrastructure financing, energy financing, water solutions, and so on. So I believe capital markets, which have already been in place, we have raised more than $2.5 billion in the last 3 years only for industrial parks. But we have a role not only within the infrastructure per se, also helping the companies within the supply chain that will form part of this opportunity or that are already part of this opportunity to finance themselves competitive in a competitive way. So markets should be called for that, should allow companies to access capital at a competitive and assertive way, and should also deploy capital for infrastructure projects. And this will happen because nearshoring is here, and this will happen because the securities law just passed, which took us 6 years, and now it's a reality. So I think we, like our bet, it's for next year to be able to have a more dynamic source of financing through capital markets.
Susan.
I'll give a very concrete answer and something that MetLife can do itself. For the last 5 years, we've been coordinating a series of workshops and roundtables on financial health and financial inclusion. And we very much hope to continue to do that with the new administration. We've seen a lot of progress through bringing the public, private, and social sectors together, sharing our learnings, growing ideas together, and building on that. We just published a white paper in the context of that dialogue, capturing key learnings and making some recommendations going forward. And so my commitment, if we're on a panel together again next year, Regina, this is 2 years in a row,
yeah.
is to report back. Hopefully we will have an easy time continuing this great effort with the new administration and advance financial inclusion.
Thank you. Shu.
I'll dodge the question. I'll turn it around to the audience. In societies that are very closely knit, it's very hard to take risk, especially for the younger generation. And I'd encourage you, when you're at Sunday lunch and your nephew or niece says, I'm going to do a startup, don't laugh at them. Ask them to tell you more and encourage them to do it. Because believe it or not, that Sunday lunch influences how they decide to spend their time more than you think.
Totally. I like it.
I love that. And you were right on time. Thank you.
That's true.
Thank you so much.
Thank you.